Traditional money markets are broken, and I came across Sturdy Finance doing something really innovative, allowing users to deposit assets and actually just borrow against them at 0%. So I have Sam here. He's from the Sturdy team. And Sam, can you go ahead and give a little bit of background on yourself? Like, what's your role at Sturdy, and how are you doing that? How are you allowing users to borrow at 0% interest on your platform?
Yeah, so Sturdy is an open source protocol where users can lend or borrow assets. In terms of my role, I founded the company that initially developed the protocol, and today work with a variety of contributors who continue its development. My background is as a developer, kind of as a software engineer, and in particular in cryptography, which underpins the foundations of cryptocurrency. In terms of how the protocol itself works, when a borrower deposits some collateral on the protocol, it's staked. So if you're familiar with platforms like Convex, Yearn,
Hmm.
or Aura, that's where the
Yeah.
collateral is staked. And then what Sturdy does is peel off a portion of that interest and distribute it to lenders. So at a really high level, lenders kind of get to earn these passive yields on their stablecoins or Ethereum. And on the other end, borrowers get to lever up. So maybe they're earning like 5%
Hmm.
APY on some yield farming position. They can use that as collateral on Sturdy, kind
Oh,
of
wow.
take out stablecoins against that position, put those stablecoins back into Convex, and then put that Convex position back into Sturdy and kind of loop up to amplify their yields.
Oh, no, that's awesome. Wow. Yeah. So, and I think I checked out your platform. I think you even allow people to, it looks like you maybe even built in a leverage inside the platform, right? Rather than having to do it manually traditionally, it looks like maybe they can just lever up using the platform itself.
Yeah, that's exactly right. So as you can imagine, that would be like really gas intensive and time intensive too, to just kind of keep doing those operations over and over again. So through our UI, there's a way to do that all in one click.
No, that's great. And so, just a question though. I mean, of course, we have some giant money market players already. Things like Aave, Compound, and there's a dozen other forks, of course. So, I guess I'm really curious. Like, how did you really come up with this idea? And what is this real problem that you're trying to solve? Like in this market, where you thought, hey, like I can bring a different perspective to things here.
Yeah, at a high level, one challenge that larger protocols like Aave face is that they're inherently zero sum. So you have borrowers that pay some interest rate and lenders that earn that rate. And the only way for lenders to earn more is if borrowers pay more. With Sturdy, the opposite's true because we're staking the collateral. There's this underlying source of yield that allows lenders to earn more without taking away from borrowers. And I think the fundamental use case, especially for borrowers, is very different. On a platform like Aave, normally what users are doing is they're depositing their ETH or their Bitcoin as collateral, taking out a stable coin or a similar asset as a loan, and then that allows them to take a positional bet. So they're kind of like trading with leverage. Whereas on Sturdy, we're much more oriented towards yield farmers. So not users who are trying to speculate on the price of a cryptocurrency, but instead earn income passively on either stablecoins or ETH.
Oh, awesome. And so when you talk about the yield being paid out, I think you all are doing something different, right? I think you have a token that you recently launched, and maybe we can dive into that. But can you talk about how yield is actually paid on this platform? Because my understanding is actually you pay out a lot of times in stablecoins itself, right? So that actually really caught me off guard. I was so used to just seeing these incentivized liquidity programs with on Aave and things like that that when I saw Sturdy Finance, actually I was depositing stablecoins and then earning stablecoins. I thought that was really unique for the first time.
Yeah, that's one of the great things about being a lender on the platform is that everything's automatic. So the yield accrues for you. It's in stable coins or kind of in kind. So if you deposit ETH, it's in ETH, stables in stables. And the way that that yield is generated is really interesting, right? It's from this collateral that the borrowers are depositing. And one way to think about it is that these borrowers are they tend to be really skilled, usually working with higher kind of amounts of money. And sort of you could think of them as almost kind of the pros that are trying to optimize their leverage and their collateral, and then you as the lender just passively benefit from all of that work and that gas and kind of everything that goes into that without having to do it yourself.
Oh, no, that's great. Yeah. And so I guess the big question is, when you talked about traditional money markets and, being a zero sum game, I guess how do you borrow, how do you balance, I should say, the lenders and borrowers on your platform? Do you have any strategies you use to maintain a balance, with all this going on?
Yeah, so the yield that from the collateral is split between the lenders and borrowers.
Mhm.
And we're always working on kind of optimizing exactly what that split is. Right now, it's somewhat manual, where kind of each asset has an individual breakdown. But I think one thing that governance should consider in the future is a proposal that will make this automatic. So based on the utilization rate, like if there's a lot of lenders but not many borrowers, then maybe the split needs to be favored more towards the borrower. So I think that's one direction that I think would be really interesting to see the protocol move in.
Yeah, no, that makes a lot of sense. And you mentioned governance. I mean, I don't know. I guess now's a good time as ever. I think you recently launched a token. Maybe we just talk about it really fast. So, are you creating a sturdy governance? Is that the game plan?
Yeah, exactly. So right now the token is non-transferable, meaning you can't buy or sell it or anything like that. And it is used strictly as of now for governance. So users can use it to vote on the future of the protocol. There's no longer kind of like a core team that is solely responsible for this development and maintenance. It's open source. Anyone can contribute. And yeah, exactly as you said, kind of make proposals, participate, vote, and just kind of make their voice heard as users or stakeholders in the protocol.
Yeah, for sure. And I guess curious here. I think you did an airdrop right for some users. I think what's it called? You maybe rewarded, I believe, some convex users, some Aura users. Maybe you could talk about that. And I think the big question is if anyone's checking out you now, any plans for future airdrops?
Yeah, so to answer the second question first, that's entirely up to governance at this point. And so the cool thing is, if you want to make that case, the forum will probably be live by the time this is posted, so you can make a proposal and try to convince people. In terms of what the existing airdrop was, the majority of it went to early sturdy users who use the protocol. And then a small portion went to users who protocols that we've integrated with. So I mentioned that you can use LPs from Convex, Aura, Yearn, and others on the protocol. And so users of those protocols also received a small airdrop in certain pools that can be used as collateral or kind of similar to ones that can be used as collateral. And so part of course, the hope is that folks will kind of learn more about the protocol and consider either getting involved in governance or using it themselves.
Mhm. No, that's great. Yeah. And I think that's really cool when you look at sturdy finance because you're not really using the token to like bootstrap liquidity or pay out in emissions. And I think if anything, I read that you were, I think, the largest money market with the highest TVL with no token at one point. Is that correct? Or
Yeah, before we launched the token, that's right.
no, that's awesome. Right. I think that's definitely an accomplishment there. And so, talking about your pairs and like what users can expect, right? So we talked a little about curve pairs, a little bit about Aura and these different assets that you support. So I guess what is the process of adding new assets? Do you have any other partnerships coming up that you'd be able to talk about, or any other ways that you're generating yield for your users?
Yeah, yeah. So previously, it was at the discretion of the developers in communication with the community. So we might
Hmm.
post in Discord and kind of feel out how people felt. But now that's totally different. Any change where we're adding a new collateral asset will go through governance. And I think this is really important because changes like this kind of retroactively change the risk profile for everyone. So having users be able to say, hey, we do want this as collateral, we don't want that, I think greatly improves the user experience and trust and security of the protocol. So going forward, that will kind of be the framework. I think in terms of what assets I personally think could make sense,
Yeah.
I think that there are a lot more like Convex and Aura LPs that would potentially be good. Given that there are existing integrations in the protocol, probably the development lift, I would think it would be feasible. Um, and yeah, but I'm super curious to hear what other people have to think too. Now that there's through this more decentralized process, kind of what suggestions get brought up that maybe I previously wouldn't have thought about.
No, and that makes a lot of sense, and that's really cool to see you like empower so much of the community, right? Really bring them in on this process because then they all share like a sense, of course, responsibility, right? And an ownership of the project of the token that they actually own. So that's really cool to see you like delegate so much. I think we can agree. There's a lot of DAOs out there or governance out there that doesn't really feel maybe as decentralized, right, or as community based. So.
Really difficult for sure. Like it's not an easy thing to build that, and so
Mhm.
we're going to try to be kind of very intentional in how we go about that.
Yeah, for sure. I think it's all a balance at the end of the day. So that's awesome. But I do think one thing I did come across, so I think you are supercharging some of these deposits with some incentives, right? I think you have some LIDO incentives right now. Pretty cool. Honestly, didn't know that up until I think about a week ago. So I think I need to get some ETH in there, collect some yields. But do you have any other incentives coming on or anything that you want to talk about with that? How you got those LIDO tokens or something?
Yeah, that was great. That was a grant from the LIDO DAO because we support LIDO, multiple LIDO assets like ST ETH can be used as collateral, so can Convex ST ETH and Aura WST ETH. And so all these are interest-bearing assets that are kind of denominated in ETH, like liquid staking tokens that come from LIDO. And so, yeah, we're super excited about that. I think it has really jump-started yields for lenders in the ETH pool. I think in terms of what it will look like going forward, again, not to sound like a broken record, but that will be kind of on governance to decide. I think that, sort of the traditional route of liquidity mining and emissions has some flaws, but also can be useful. One thing that I hear sometimes when I'm talking to users is that they worry that there's not enough liquidity for them, like maybe they won't be able to withdraw their funds if they need to. Yeah. And so I do think that there is something to be said about the value of bootstrapping pools, but 100% you don't want to be in a place where you're relying on that and users are only using the protocol for that reason.
Yeah, for sure. I think at the end of the day, like, maybe I sound like a broken record now, but it is a balance, of course, right? Bootstrapping and emissions was a very proven kind of like DeFi like 1.0 plan, right? And it worked really well. But I think at the same time, we've seen a lot of impact on like how some of those tokenomics actually, wind up being now that we're here in 2023, and like what that really looks like when, emissions start to kind of drop or start to run out per se. So I think it sounds like your team has been able to kind of learn a lot and maybe, have some takeaways from maybe these other projects that, came before you and kind of like try to, work in the best of, both worlds kind of thing.
Yeah, absolutely. I think that's one great thing about being in crypto and DeFi in particular is there are so many different projects that you can look at, most of them open source, and you can kind of learn and pick up the best practices.
Yeah, no, it makes a lot of sense. That's awesome. Right now, I know you traditionally launched on Phantom actually, and since you're on Ethereum, and just curious, we had some big news today. We had the Arbitrum airdrop, and I just have to ask if is Sturdy going to come join us over on the Arbitrum ecosystem? Is this something up to governance, or do you have any plans for your kind of multi-chain expansion?
Yeah. I mean, it would be up to governance, but personally, I think that it would make sense as somewhere to consider. One of the requirements for us is that we have great sources of yield on the chain, that Sturdy is on, right? So if there's not really any great yield sources, then there's not anywhere for Sturdy to stake the collateral, and it just doesn't make sense. But the cool thing about Arbitrum is that there are so many of those, a lot of them oriented around GMX's GLP and similar protocols. So I definitely think that it could make sense. I think one thing that would potentially be a concern is that there are already a lot of ways to leverage GLP. And so one thing that I think the community would want to consider is just, exactly what Sturdy would bring that's maybe unique from the other protocols that are already live.
No, for sure. I think when I look at the Arbitrum landscape right now, you're right. There's a ton of projects building on GMX, right? I think the joke on Twitter at one point was, hey, ping me when we have a project not building on GMX at this point. So, but I mean, I would say looking at these other, maybe even other projects in the ecosystem, right? I think there's a lot of maybe not as much, how you say, confidence in maybe some of these projects, right? Just being newer. Nothing wrong with the teams, right? Nothing wrong with the vision. I just think at the end of the day, there's been a lot of exploits, a lot of hacks, right? We've seen billions of dollars gone in, DeFi over the years. And ultimately, I think teams are getting better every year, but things happen, right? So I think teams really want to find a protocol they can trust that they don't have to worry about, right? And I think Sturdy can bring a lot of that. Last time I checked, I think you all had completed 3 full audits now. Maybe you could just talk a little bit about your security practices and how you're kind of protecting your users here.
Yep. Yeah. So the Sturdy protocol has 4 audits from 3 different firms. And I think it's really just important to take that stuff seriously. There's also an active Immunify bug bounty. I mean, it's one of those things that you have to constantly do. There's no easy way to do it. You see sometimes teams that do everything right and still get exploited. And so I think it's still really, really difficult to kind of develop DeFi protocols in a way that's secure and anti-fragile. But as you said, the tools are getting better. The exploits are becoming less frequent. So I'm kind of optimistic that things will, that kind of thing will happen less frequently over time.
Yeah, because of course, I'm sure you've seen the recent news, right? It's definitely always a sad day in Twitter when we see an exploit. We saw another project over there, Euler Finance, right? I think it got hit for about 200 million. And a lot of users were affected. A lot of what you might even say crypto Twitter royalty, right, had deposited into Euler Finance. So any takeaways that your team had, any things that you all are driving towards, with this news, with this exploit, that you all are trying to, bring more security to your platform or even bring more confidence overall to the DeFi ecosystem?
Yeah, I think that's just a great example of how difficult it is to get things right on security because they had a ton of audits. Even their most recent code changes were audited, and so that's exactly what you're supposed to do. And just unfortunately, the auditors didn't catch it. And so I think a lot of it is just about having better security tooling. For example, one product that I think would be great to have is some sort of like automated circuit breaker where if an exploit is detected, it somehow kind of like stops the protocol in some way and ensures that the damage is mitigated. And there really aren't great tools for that today, but hopefully there will be. And I think for us, it just kind of underscores the importance of continuing to do audits, as frequently as we can. But it's very difficult. I mean, like I said, they kind of did everything right, and so there's no silver bullet here.
No, for sure. I mean, at the end of the day, everyone's still learning. The space is still very new, and it was extremely unfortunate. They, like you said, they try to do everything right, and that's really all you can ask for in this space a lot of times. So, hope this team is able to, work some things out. I know they're trying to, get back the funds, try to offer some kind of white hack, bounty to the exploiter, but we'll see what happens here in a few days. So. But kind of wanted to pivot gears. I really wanted to go back to focusing on some of the core features of your platform. And I think one of the cool things is, of course, being able to deposit, convex LP tokens and leverage them up. But of course, we had some other big news, right? The last couple of days, we saw for the first time in a long time, USDC Depeg. And so really kind of wanted to just talk about in general, what would a USD Depeg mean to, a money market such as Sturdy Finance? Like how would that maybe impact users, and what are maybe some just best practices or gotcha that users should look out for when using, borrow and lending platforms?
Yeah, if you had posed this hypothetical like a month ago, I would have said, that's really not realistic, not really going to happen. But absolutely, I think it just totally underscores how risk averse and like hyper paranoid you have to be to survive. And so, luckily, we can know exactly how how it would happen because it did.
Mm.
And what happened is most borrowers were totally fine. There was actually only a single user that got liquidated from their position,
Wow.
and that was because they had collateral denominated in USDC, but debt in USDT. So the kind of borrowed amount stayed the same, but the collateral decreased and they got
Yeah.
liquidated. But all lenders were protected, $0 in bad debt, which is the important part. And interestingly, most borrowers didn't get liquidated because both their debt and collateral was USDC or kind
Okay.
of had USDC in it. And so
Yeah.
they kind of fell in step. Um, but yeah, I think in terms of what users should look out for, I think especially if you're leveraging up, you should be like very conscientious about what the collateral asset is and kind of the different price
Mm.
risks within it. And then as a lender, you should always be familiar with what the collateral assets are and kind of the price risks there, and then what the liquidation mechanism looks like, because that's ultimately what's protecting you as a lender.
Yeah, yeah, no, that's great. And I think if you would have asked me again, like you said, a month ago, I I would have never, right? Most of my crypto net worth is definitely in USDC. I still think it's the most trusted stablecoin out there. And here we can see it, of course, climbing back up to peg. It looks like everything is going to work out just fine for us. But yeah, definitely a scare, I think, among the broader community. One thing you mentioned though was liquidation. Maybe you could just touch on that. I think when we talk about borrowing, lending, and leveraging up, right? That's always people's biggest fear is, am I going to be liquidated, or how can I best protect myself in my strategy to avoid liquidation? So, how does it all work? Do you have similar mechanics as other money markets, or did you put a unique spin on things, or?
Yeah, it's pretty similar to Aave, where if a
Mm.
user's collateral falls too low, below like a certain ratio, what happens is that anyone can be a liquidator. So again, totally decentralized and permissionless. And what a liquidator does is they repay that borrower's debt, and in return, they get a portion of the collateral. And ideally, that's a profit. If everything works well, the collateral that they receive is greater than the debt that they're repaying, and so they have this incentive to do so. And by doing that, then they kind of make the protocol solvent. Everything's good again. And yeah, so that's the way that it works. And this is very similar to how most other protocols work as well.
Yeah, that makes sense. That sounds a lot like what I'm familiar with seeing with some of these other money markets here. All right, so with Sturdy Finance, obviously you support all these different LP tokens and assets, right? You mentioned things like Aura, Yearn, Balancer, but do any other projects integrate with Sturdy? And like, what is Sturdy's, you think's role, just like in an overall broader DeFi ecosystem? And how do you think it can, enable users more?
Yeah, that's one thing that's been really cool is we're seeing more and more protocols that are integrating Sturdy. My personal favorite is Yearn. Now, if you're familiar with Yearn, it's basically a yield aggregator. They put, you deposit stables to Yearn or something like that, and then
Mhm.
Yearn deposits those stables to the sources of yield that provide the best, in their view, risk-adjusted returns. And yeah, it was really cool. Now, Sturdy is integrated. So if you deposit into Yearn's USDC vault, a small portion of that is going to Sturdy. And yeah, just personally, that was one of the very first protocols I use and still use, and I'm a big fan of. So it was really cool to see that happen. And I think generally we're going to see more and more of that. I anticipate that as Sturdy grows and users get more comfortable with its risk and kind of better understand its mechanics, that protocols that are looking for integrations that can get them a great source of yield on either their stablecoins or their ETH will, make that deposit in Sturdy.
No, that's great. Yeah, and you're in, again, one of those products that I use super early on. I've actually have come full circle back to Yearn recently. A little bit off topic, but they're building this LSD product, and it's definitely really cool to see everything that they're doing over there. And just quick question, I guess right now you support, I believe LIDO ETH. Hopefully any plans to support maybe some Rocket Pool ETH or some of the other liquid staking derivatives, or are you all innovating at all in that space?
Yeah, absolutely. I think that that would totally be something that if it was put before governance, I would
Mhm.
very much support. Um, the one thing I will say is that for us, the oracles are really important, right? Or at least in my personal view, and kind of previously to governance going live, that was kind of one of the chief determinants is there needed to be a chain link oracle.
Mhm.
And our ETH, which is the Rocket Pool ETH, didn't have one. I think they
Oh,
may recently have
wow.
released one, which is super exciting, and I think would probably make it viable, at least in my opinion.
No, that's great to hear. Yeah, I've been a huge fan of the liquid staking derivatives play. A lot of my previous content has really been focused on it. So great to hear you all are looking into things. So cool. So really kind of just switching gears, we've talked so much about sturdy finance, but really honestly would love to kind of just talk about your own story as well, just being kind of a founder in the Web3 space, right? We're kind of going through a unique, economic time around around the world with, kind of this looming recession that people have been talking about. And so really want to hear about, what is your thoughts of being a founder in the Web3 space? Any advice for anyone looking to maybe, create their own project or, enter this space or perhaps raise some capital? Any thoughts there?
Yeah, it's definitely been a really crazy time where it just feels like everything that can go wrong does. When we launched, it was around the time when Anchor imploded. And so there was just so much kind of like fear and anxiety around lending. And basically, like any yield that was even decent, people immediately were like, oh, that's a Ponzi. And we're like hyper skeptical of, which I think is good to some degree, but maybe went a little bit too far in the aftermath of Anchor.
Mhm.
And so yeah, it's definitely been a tricky year for sure, right? When like sentiment is kind of bad and there's not many new people coming into the space. But at the same time, I do think there is something to be said about the fact that there isn't as much noise. There's not as much kind of like hype. And so what you're able to do is really kind of hyper focus on getting the user experience right. And kind of like getting the mechanics of the protocol down. And there's also, because there's less noise, it's a little bit easier, I think, to stand out and to share what you're working on with the users who can benefit from it most.
No, that's great to hear. Yeah, because I even saw that A16Z, I believe, just started like a kind of a Web3 cohort that they're kicking off. And so one of my concerns was that, with this kind of economic downturn, that you might see, funding dry up and it might, not allow, certain people to kind of enter in the space, right? Just given that, there's kind of this barrier to entry on the, the capital side. So do you think that, we might see, less money flow into over the years, or do you think that the people who are working to solve great problems will always just kind of more or less find a way, right? They'll find the right investors who will be able to kind of, catapult them forward.
Yeah, it's no doubt harder now than it was, in like a year ago or
Mhm.
much less 15 months ago. But it's still possible. I mean, a lot of these funds that raised kind of during the bull market still haven't deployed capital. And so they, have like funds in the bank and are, kind of either deploying or biding their time. So
Mhm.
I think one thing is that it does feel like a lot of it is tied to the greater economy, as you kind of alluded to. And the fact that the recession is affecting crypto is in itself kind of like telling. But yeah, I think it'll always be possible, but for sure it has gotten trickier now.
Yeah, of course. And then, I mean, another big story of the week is, we have quite a few banks collapsing, right? We had Silicon Valley Bank, who was very prominent among, both tech and startups and crypto, right? I know a lot of teams were impacted there, right? So definitely, there's definitely a lot going on here. Yeah, so I guess if anything, do you have maybe even just like a one line of advice for, someone who's aspiring to be maybe a builder in this space, anything that, you would want to share with them?
Yeah, I think for me, the main thing is make sure that you're hyper aware of what exists and what users are looking for. One thing that I sometimes see is that people will come in maybe from like a Web2 background and immediately kind of try to found something. And obviously, I think that's great that there are so many people coming in, but one potential downside of that is that you may not fully understand what users are looking for, because I think that users that are in crypto tend to be a little bit different from like typical users and what they're looking for, and have like very specific needs. And so yeah, I would just recommend that, like, if you're interested in building in DeFi, crypto, Web3, kind of however you want to frame it,
Mhm.
just that you've like spent a bunch of time, know what's out there, have talked to as many users as possible, and really have kind of like that familiarity. And I think once you have that, then it becomes much more clear where the gaps are.
Yeah, no, that makes a lot of sense. And, I get the sentiment a lot. I think 2021 or 2022 was this idea of like, we could put anything in crypto, right? If it's out there, we should put it on the blockchain. But I think people are quickly realizing where you got to find a unique use case, right? What is the real problem that you're trying to solve? What is the real value you're trying to bring by putting something on the blockchain or putting something decentralized? So makes a lot of sense what you're describing. So, awesome, Sam. Well, definitely thank you so much for sharing like, your background as a founder. I think honestly that's going to help a lot of people. I have people in my own community. I know that they're building their own projects. So I think that advice is great, right? And I'm stoked to share it with them. But overall, right, I think we covered a lot of ground. I think we talked about, sturdy finance, right? The problem that you're really trying to solve here in this space, right? The unique value that you're trying to bring here, right? Talked about all these different things on your roadmap, right? With the token launch and governance and different proposals that I'm sure people can go check out. Any final thoughts that you want to share with anyone?
Yeah, well, thanks again for having me on, Nick. And for the folks who are maybe interested or considering working or building something in crypto, you're welcome to reach out to me. I'm PGP Sam on Twitter. Yeah, sometimes I'm like crazy busy and I take a while to respond, but I always read it. And yeah, always I'm kind of looking to help out folks who want to learn or build something.
No, it's awesome, Sam. So if anyone's curious, I'll put all the links in the description so you can just go ahead and check it out there. That's awesome, Sam, offering up your advice and assistance there. So yeah, thanks for coming on, man. Thanks for telling us so much about Sturdy. Looking forward to see what you all do next. Cheers and happy farming.